Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The global economy has 1 month to go to bolster its 2025 economic performance, all down to retail sales now. First, of course, the US is now in its Thanksgiving holiday weekend, the start of their big retail period until Christmas. A lot rides on the consumer spending in this period. It is an impulse with global impact. But the lead-in has not been helpful about giving clues about how it will turn out. Meanwhile, Canadian average weekly earnings came in stronger than expected, up 3.1% in September from a year ago, a touch higher than the 2.7% rise in August on the same basis. It was a broad-based rise. It is not a bad result for them, given their CPI rise was 2.4% in September and fell to 2.2% in October, so their earnings are recording real gains. The Buy Canadian movement will be getting the ultimate test this weekend during the Black Friday sales period. In China, industrial profits dropped 5.5% in October from a year ago, taking the top off the 22% jump in September and the 13% rise in August, and being the first slowdown in growth in 3 months. A quarter of all companies there now are posting losses, a record high. The cost of debt is also a reason some are noting that profits are under pressure. And that may loom larger because Beijing has told their state-owned enterprise banks to lend more to the other state-owned enterprises to prop up consumption demand. And we can also see office rents in major cities falling, vacancy rates rising, as pain spreads in the commercial property sector. Vanke is wobbling more now. And separately, despite high sales and rapid growth, the Chinese car manufacturers are suffering record low margins. Their industry is very vulnerable to a demand slowdown. And in Taiwan, consumer sentiment edged up in October from September, but is still quite low and far below year-ago levels. They haven't got back anywhere near the levels they started with at the beginning of the year. Relentless main pressure to unify and kill their independence isn't helping. And the Bank of Korea held its base policy rate at 2.5% at yesterday's meeting, the final policy session of the year. It did this despite concerns over the broader Korean economic outlook, including a persistent property market slump and a volatile currency. In Malaysia, producer prices were little changed in October, essentially ending the deflation they've had in the past 7 months. In the EU, overall economic sentiment held up, as did consumer inflation expectations. They are modest and back to pre-pandemic levels in a stable mode, and putting behind them the rather strong deflationary expectations over the past 2 years. That sanguine view was reinforced by the release overnight of the ECB meeting minutes. They seem happy with where they are at, and no rate changes seem imminent there. In Australia, prudential regulator APRA has said it will limit high debt-to-income home loans to constrain riskier lending that is starting to show up in that market. Some of it has been induced by the Canberra government's taxpayer-subsidised 5% deposit guarantee scheme. And staying in Australia, new private capital spending is rising, and more quickly than expected. The rise was largely driven by non-mining industries, recorded a 13% jump, while spending on mining equipment and machinery grew just 4.5%. And global container freight rates dipped 2% last week to be 47% lower than year-ago levels. Outbound China rates are a touch weaker, while transatlantic rates are a touch stronger. However, bulk cargo rates have risen 6% over the past week and are now sitting a touch over 50% higher than year-ago levels, and back to levels we last saw briefly in November 2023 and prior to that during the pandemic. The US Treasury 10-year yield is still at just on 4% with the US markets closed. And the price of gold will start today at $4,156 an ounce and down $10 from yesterday. And American oil prices have risen almost $1 to be just under $59 a barrel, while the international Brent price is also up, but less, now just over $63 a barrel. And the Kiwi dollar is up another 30 basis points from yesterday, now just over 57.2 US cents. Against the Aussie, we're up 20 basis points at just over 87.6 Australian cents. Against the euro, we're risen 30 basis points to 49.4 euro cents. That all means our trade-weighted index starts today at just under 61.9 and up 30 basis points. And the Bitcoin price starts today at $91,468 and 4.5% higher than yesterday. Volatility over the past 24 hours has been moderate, at just on plus or minus 2.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.